A very good afternoon to Madam Hazia and fellow friends. This is Group 7 and we are going to discuss about the famous investor which is Andy von Bechtolsheim. So basically, this group consists of 5 members which are Brenda, Chong, Huang, Jason and Jun. Once again, a very good afternoon to Madam Hazia. I'm Jason. I'm going to introduce the famous investor named Andreas von Bechtolsheim as well as the name Andy or Bechtolsheim today. He was born in Germany in the 1955 and he was the second child in the family. He used to live in a house without televisions or neighbors, and what he had in the days are just the electronics which made him an engineer in the 1980s. Thus, he is also an entrepreneur who founded the Sun Microsystem, Granite System, Kilia Incorporated, and also Arista Network in 2005. Furthermore, he is also an investor who invests in the startup of the businesses, and the business must have the future potential to get his investment in. The most iconic investment that he made throughout his life was on Google in the 1998 while he was studying in Stanford, and it was said to be the smartest and the calculated decision that he made throughout his life. Next, we'll be discussing about the strategy that he used in investment.
Bechtolsheim is known as the most successful angel investor, also called business angel, who invest their own money into startup companies with high growth potential. As being titled as angel investor, it does imply indirectly that his investment strategy is growth investing. A growth investor specifies strong upside potential earnings in the future before performing investment. They have to evaluate the potential of stock to grow in the future. Bechtolsheim was inspired by the search engine idea from the founders of Google. He anticipated the potential of Alphabet Incorporated to grow into a much bigger and valuable company. That was exactly why he gave them the $100,000 check.
Next, the performance of Google stock will be discussed. This part includes the stock price of GOOGL and GOOG. Alphabet Inc., or formerly known as Google Inc., is a corporation that manages a variety of businesses such as YouTube as the famous streaming video website, the Android mobile operating system, cloud storage services, and a slew of additional business initiatives. In April 2014, Google stock was divided into A shares as GOOGL and C shares as GOOG. Class A shares are the common shares in which investors are given an ownership stake and the right to vote. Similarly, investors in Class C shares have an ownership stake but not a voting right. Therefore, many of Class C investors are willing to trade their shares to Class A shares at a discount price. This slide illustrates the bar chart of GOOGL and GOOG stock price in October 2021. It shows that the stock price of GOOGL on 1st of October is $2,728.38, and it increased to $2,960.92 on 29th of October. While for stock price of GOOG on 1st of October is $2,729.25, and it rose to $2,965.41 on 29th of October.
Investing in Google stock has both pros and cons, which will be discussed further in the following slides. The pros of investing in Google stock is that it offers a great long-term investment. Google's search engine fuels the growth of the internet around the world except in China and earns by dominating the digital advertising market. Besides, Google owns YouTube, which is recognized as the world's largest video platform. YouTube boosts revenues through ads, where it allows advertisers to publish their advertisement for some valuable viewers. Also, Google has built a fast-growing cloud business that ranks among the top 3 in the cloud industry. Data and workloads are continuing to transfer to the cloud at a fast pace. Next, it has strong financial performance indicated by few elements such as revenue, operating margin, price to earnings or PE ratio, and debt to equity DE ratio. Google's revenue increased by 13% annually in the first quarter, indicating that the core business performed well and that the merchants are paying more for advertisement. In March 31, 2020, Google recorded 90% operating margin, which is regarded to be a good operating margin. Hence, Google is profitable and recognized as the most valuable company in the world. The P/E ratio measures the share price of the company to the earnings per share. A high P/E ratio shows the stock is overvalued, while a low P/E ratio indicates a good bargain investment. As of June 5, 2020, Google's P/E ratio is 29.021, indicating a greater ratio that signals higher prices compared to earnings. While for DE ratios measures the total debt of the company to its equity, where the value below 100% is considered good. Google's DE ratio was 0.08 at the end of the 2019 fiscal year, showing a very low debt load in relation to its equity.
Nowadays, there are only certain companies such as Apple that have come to successful in deploying both the software and hardware. However, Google has still limited success in launching the hardware unlike those companies. While Google excels at its software, its foray into hardware has largely failed. To give you an idea, Glass has had little influence apart from a lot of public relations or jokes, and the phone Nexus remains a minor player in those mobile markets. Lenovo bought Motorola since Google's acquisition of Motorola was such a big blow to the company's hardware division. Another significant danger for investing Google stocks is the falling profit margins in the cloud market. Cloud computing is in high demand at the moment, and companies like Google can effectively set their own pricing and find the customers. Nevertheless, certain elements such as the lock-in of a client's data are cited by cloud proponents as contributing to the sticky and high-margin nature of cloud services. Even yet, there is a good disputation to be made that the cloud hosting will become a good service in the near future. Gradually, certain services as for examples, landline or mobile telephones, cable television or internet using broadband have now evolved from high-margin items to dull and less profitable goods industry. Cloud computing will soon become just another utility service. Not only that, Alphabet also faces a risk from its erratic capital allocation strategy. This company is well known for making numerous side bets that are only tangentially related to its core search and advertising business. Green energies, robots, and delivery drones among the projects Google has embarked on. Some of these projects, for example Waymo, seem to have a lot of potential. Even so, many of them haven't worked out as well as the corporation had intended. A number of these projects have been cancelled by Google, and it is unclear whether the scattershot method of moonshot endeavors had resulted in much concrete shareholder value. Instead of investing those funds, Alphabet might have purchased back stock or issued a dividend to shareholders, which would have resulted in a significantly better outcome for shareholders.
In conclusion, Bechtolsheim is being recognized as one of the most successful investors in the world. He is also known as angel investor after he founded Google and made a fortune. His investment strategy is growth investing as he predicted the potential of Alphabet Incorporated. In present day, Google stock is one of the most profitable stock. That's all from us. Thank you for your listening.